Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. We are seeing green arrows around the world this morning, showing us some signs of stabilization. Our futures up about 8 to 9 handles, and after about a 4% correction in the S&P, gotta ask Scott if you think that was the correction.
Now, everyone's going to put out their opinions and say, okay, no, I don't think this is it. I think we're going to go 10%, 15%, or yes, that was it. Get both hands and dive in.
Right.
At this point, no one really knows. All we know is that you have to map out levels and then measure the action. And yesterday in here, we talked about the different trends and which ones do you follow and what type of area support might hold. So if you look here at the chart, you will see that here's the macro trend that started all the way back in 2011, where we're not even close to testing. That's actually below the 200-day. Here was last year's intermediate trend that we followed very closely, that we almost touched yesterday, and here is your accelerated trend. So overall, we're down 4% off the highs, but really the bulls just got a little extra spoiled, in my humble opinion, considering that you had this last little move to end the year, and then all we've done is pretty much take that back and we're back to where we were at some point in December. So with that being said, we mapped out, the 100-day, which is right here. We mapped out 1770-ish, and it went to as low as 1772. So hopefully, yesterday you covered some shorts if you got short here, and if you reduced some risk around 1830, maybe you tried a few different tactical longs versus this low and have them today. And if you don't have them overnight, maybe a little sideways action, and then perhaps we get a trade above that 1795.
Now, what sort of pattern would you think that the bears would like to see to determine whether we'll get more downside?
Well, first I want to, if you look at the trend, I was just looking at it to see, when we hit this trend line, what things have happened, so we can measure the move also. So, you look here at the chart. So if we take a look at this trend line that we've seen before turn-ups, like look at this pattern. This was like a little bit of a doji off that area. When you saw that right here, okay, this was a doji, you had power. Okay, so that meant, okay, here we go, back to highs. Here, you had a little bit of a doji, green bar took out the prior high, continued, digested, then went. Okay, so the other time that it hit this little trend line way back here even, you had 2 inside days before going. So with that being said, you come back here, so the question is, oops, let me take this over here. Let's move it. If this is your day one, okay, if first of all, if we don't build on today and we take out yesterday's low, that would just show pure weakness. If we have an inside day-ish with a little bit of strength, then maybe in the next few sessions we take out 1795 or maybe today, and then we build. But there is a pattern that could happen that we could watch closely, and it's definitely a little early. A head and shoulders top pattern. Here is your left shoulder. Okay. Here is your head. Okay. This was your push back. Now we're oversold, and if we get an oversold bounce, if the bears contain this 1812 to 1820, then what does that look like? That looks like a head and shoulders top. And then if that's the case, you will have a predetermined neckline where we bounced from, around 1760. And this time the 100-day doesn't hold, and then you get that move from 1850 to here, which is that, and that would give you, a move back down to the 200-day that people are calling for, or maybe even to this more, macro trend line, which hasn't been tested in a while. So overall, taking it step by step. Yesterday, decent day to cover some shorts, and now let's see if we could get some type of oversold bounce here. And if they do reject it there, then perhaps this pattern could give us more downside, and then we could make money from the short side too. We don't have to be one way.
All right. Well, we are in the midst of earnings season where we've seen all different types of action. So we're going to turn the spotlight now on some stocks that are reporting earnings today and tomorrow. See where we stand. We have Yahoo reporting after the close today, where earnings per share estimate is about 38 cents. And we did get some downside follow through yesterday after the stock broke below the 50-day on Friday. So what are you making of where we're at with Yahoo right now?
Well, at least it's not priced for perfection. Last year, it was in my 2013 thesis. It was tight, looked like it could break out and go, and went further than anyone would have wanted. So with that being said, you have to be a little careful because of the size of the move. You look here at the chart, and you will see that, for the most of last year, it hugged the 8 and 21 day and only hit the 50-day once, okay? Or actually, no, sorry, that's the 100-day. So with that being said, this is the 50-day that it's been following, and if you reduce some risk around here, because I remember talking about it on the VTF a few times, saying it looks a little vulnerable, now it's pulled in a lot. So with that being said, if they do have a strong report, okay, and decent guidance, you could see a reflex move back up. So if you wanted to just say, if you said, you know what, I missed a lot of this, this Yahoo move, the Alibaba IPO is going to happen, this and that, just because there is earnings and there's earnings risk, maybe buy some, in the money options going out a month, okay? If you want to wait to see the action, after the print, at least here you have yesterday's low, which is 36.62. And then where resistance is in the highs, and then here is your 100-day. For me, I'm going to avoid it. But again, I think it's almost, I would say, a better chance that if you wanted to take some kind of calls into this support zone, I'd rather do that than you seeing puts, considering the size of the move it already had off the highs.
Well, a lot of eyes will be on Qualcomm tomorrow after the close, especially in light of the concerns about the slowing smartphone market and Apple's late iPhone numbers. It's trying to hold the 50-day. What do you think about Qualcomm?
Well, this did a breakout failure, which at least tactically, is a warning sign. So if you look here at Qualcomm, you go, boom, breakout, failure. That's your signal out, and then you're right back into the base. So with that being said, I'm not going to predict what their earnings are going to be, but you just saw Apple a little weaker, and you've seen some mixed signals throughout the group. Overall, this 72 is some decent support from a past trend line. So almost a better trade would be if it is softer, opens down, and goes from red to green. That would be a trade. And then if you're a Qualcomm fan, I guess do something with options. I'm going to avoid. I'm going to trade after. I'm trying not to do too much because I don't see anything so set up, and I'm not sure if this will be a feeble bounce in the market or something that gets sustained. So I'll wait and see. No rush there.
Right. Okay, well, over in the casinos, we have Las Vegas Sands reporting after the close tomorrow. Now, what do you think about Las Vegas Sands? Because it has lost a little bit of momentum lately.
You're seeing the same similar pattern on a lot of these where they're getting hit now because the market's coming in, so they're not at least on the top end of their range. So there's a little room there that if it's strong, it could bounce, and if it's weak, you might, and it opens lower, you could buy it. So I think that's the better trade. The better trade is not to guess what's going to happen into earnings. It's wait for the earnings and then trade after the fact. And if you look here at LVS, this was your buyable breakout, and then it's been following the 8-21 day and then broke there. That's your signal to get out well before earnings. So if you did get out, look to see what type of opportunity we have coming in. If, again, you're very heavy in this arena and you want to be long into this area, so buy some in-the-money calls. Go out 3-4 months, okay, because you just did have a pretty decent correction down to here, so it could be an opportunity. So you're seeing a lot of these things like this where, at least here, even if they beat and got it up, it might have been priced in. So if it's going to be good from down here, at least there's the benefit of the doubt.
And Boeing reporting before the open tomorrow. What levels should we be watching here?
This one didn't correct as much. So with that being said, it's got to be a good report to hold up. You look here at Boeing, and the chart has also been, a trender where it's been following the 8-21, and it's the first time at the 50-day in a heck of a long time. We're talking about since last September. So, it broke right here. Now it's trying to hold support. Again, if you've been in Boeing, since last year, this was also in the 2013 thesis with this huge, long decade, friggin' even longer than a decade channel, it's come a long way. So if you're blindly buying it because it pulled in just a little bit, look at the size of the move. So take a little care there. So all in all, I think this earnings season, as far as if you're an investor, know your time horizon as a trader, there really hasn't been that much opportunity, with puts and calls. Even the ones I was long eBay calls, made peanuts. Microsoft calls, made peanuts. It's been tough, so you're better off just letting these things pan out.
Well, let's just get in one more name because we do have Facebook also reporting after the close tomorrow, and we'll get some more clues about social media from that name. What should we be watching here?
Well, you want to see that growth continues, and this is not priced for perfection either. This one I might take some in-the-money calls because I do think it could have a good report, and the street almost wants it higher. But with that being said, I'm not going to make a really huge bet. You look here at Facebook, the different patterns here. This was your cup and handle pattern that was way back when, before they proved that they can monetize mobile. And this was that accumulation pattern that wound up giving you a really nice move. If you weren't in it for that, remember after that earnings report, you had this huge gap up. That's why we judge huge gaps up, because it gives us indications on what direction at least it can go. And this was to the upside. You had a big move, correction, big move, and now we've pulled back. So it is in the lower end of this area. So we'll see what happens on earnings. Remember last time, it came out with earnings and it was a mess. But this time we'll see what happens. This was your little micro breakout failure that if you were holding this long, hopefully this was your sell signal, and then that was even before this trend line broke. And now into 52-ish, if you wanted to buy some in-the-money calls to be in it for the action, you can, or just wait to see the report and trade it accordingly. Again, some of these options trades that I've been doing are either breaking even or like last night with Apple losing. So, I would just trade it after or let this pretty much period come behind us and wait for better setups in the macro patterns.
Okay. All right. Well, coming up, we're going to go in the trenches with stocks that have already reported earnings, checking on some of those names. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with some stocks that have already reported earnings. Stocks like Microsoft, which had a positive earnings report last week, but did give back some gains yesterday, along with the broader market. So what are the key levels that we need to watch with Microsoft today?
This one had a positive report, and it's still, because of the weakness in the market, just couldn't hold itself up. And if you look here, you want to talk about levels to hold. This would be one of them. 35.50 would be a nice level to hold, and if it doesn't hold that, this is your major support. I know they're still looking for a CEO. If they get a good CEO that the street likes after a report like that, you would expect once the market turns up, this could be something to go to. So Microsoft's on my radar. I'm just not there yet.
Is eBay then on your radar? Because similar to Microsoft, it did have a positive report last week, but then sold off yesterday.
It just keeps showing you that it's not ready.
Right.
With that, I figured maybe this is the time that eBay could break out of this channel, and it looked like it, after hours, it was up above 59 with the Icon news that he bought in and the whole buyback, and PS, it went right back into the base, making it an avoid or just sit if you're an investor, if that's what you do. You look here, look at the size of this channel. eBay has done absolutely nothing. If it would have opened above this level and held it, traders would have been like, oh, this looks good, maybe it could break out. What did it do? It failed. Right back into the space. So at this point, if you're sitting in it, sit in very small. If you're waiting for some type of blockbuster tweet or news. For me, I'm just going to either micro trade it or give it time because, again, it still hasn't figured out what it really wants to do here yet.
And we know Apple came out yesterday and disappointed. It was down about 7% at last check this morning. I know you had to say bye-bye to your options, but how else are you handling it now?
Crying. No, I'd be crying if I didn't have a plan and I bought stock and I'm like rolling the dice because it was a no-brainer, which obviously there are no no-brainers out there or free lunches like some would say out there. So with me, I did it as a plan. I said, you know what, nice tight nice tight setup. If iPhone sales are good, if guidance is okay, which it could have been, it's going to break above 560, 575. I want to have some kind of action in it. If they halted, you know what, they didn't halt it. It was light. You actually could have got short there, because it gave you some time because you knew 530 was the level it had to hold, and it busted below there after hours. So my calls are worthless. I risked what I was willing to lose, and now I'm going to try and figure out how to trade the stock. Maybe not today. You look at this tight pattern, it could have gone either way. It went to the downside. Okay, with that being said, you had one level of support here, which actually first this was 530, now this is 515. I think it's below that for now. If the bears keep it below 515 today and have a huge gap here, Apple could have some problems moving forward. It can come all the way into the 483 number. If it opens up down, here around 508 where it is now, and then all of a sudden puts a low in at 505 and then grinds its way back up, and instead of being down 40, it closes down 20. Maybe, maybe people say, okay, they give, it's undervalued, it's cheap, like everyone calls it. But if it opens down 40 and closes down 50, you're going to have a huge gap there, which at least we have an identified area to watch against, and then you could see more downside. So for me, I'm probably going to give it like 15 minutes at least. So if it puts in like that pivot low, maybe I'll buy it, verse that, and see if it could retrace some of this gap. And if not, and just let it figure itself out and
Right.
try and trade some other things.
Right.
'Cause, this has been very frustrating lately.
Yes. Well, how about Netflix? Because we know that Netflix rallied last week on positive earnings and has had trouble getting some traction since, but it did rally off its lows yesterday. So how encouraging is that for you today?
Oh, it just shows you that it could be a little dangerous because at first, bulls wanted to stay in it unless it broke the earnings gap, which is just like different than the Apple earnings gap. You look here and you'll see here's your gap up. Once it traded into this gap, okay, 377, people were probably shorted, right? And then it looked good. It went as low as 370, and then what did it do? It came back up. So this was your pivot. That was what you based your long or short around. But overall, came back up. It's in the space. If the market wants to have anything that could break out or have breakout potential, it would be this stock, and it would have to start getting above 391. But I'm not sure that the market's ready for that. So with that being said, use 5 and 15-minute charts, and there's a lot of action in here for the micro scalper. I'm just not sure if we're going to get a bigger move yet.
All right, well, in doing some quick hits here, then should Tesla be on our radar today then, because it did break below its 8-day, but it got a nice bounce off its lows just like Netflix did.
Yes, this is holding up better. There's a huge short interest. They came out almost pre-announced their earnings 20% higher. It's just now trading. And if you look at the chart, it still looks okay. This was that red dog reversal here. And now, you have yesterday's low to trade against. Do I think it's just going to get up and go and break out above 180 and change? Don't think so, but I'd like to see this build also. Let this build, let it show relative strength. It's just at the 8-day where the market itself is all the way down to, I think, almost the 100-day. So with that being said, relative strength, don't look at valuation, look at price, look at patterns, look at relative strength. The longer it stays now above this 164-ish, the better the pattern and the higher percentage of a move above 182 and then above if it delivers on earnings, into the 200s even.
Well, from one Elon Musk stock to another, how about Solar City retesting its 21-day? Is this on your A, B, or C list today?
This would be on the A list as a long because it actually went green yesterday when a lot of things didn't, and it's holding higher moving averages. Also not considered a Chinese solar name. A lot of those got beat up yesterday. Held the 21-day, tried to reverse off it. I guess if it were to take out this 2-day pivot and get above 74-ish, then perhaps you could see a move back to the highs. This is still in the game for higher prices. This is probably one of the best technically set up solar stocks, so we'll see how that continues.
And we should mention the TBTs perked up yesterday, 1.3% gain. I know you like to see that.
Yeah, it was funny. We were on the virtual trade floor. It was like 3:30, and everyone's, I have a little spiders. I had a little XLF. People are like, Red Dog, go with the TBTs. Another Red Dog reversal. And I reverted back to the old dog. I'm like, no, it got me. Last time I did this, it crushed me. If you look at the chart here, that was right here. It was on, I believe, this day, okay, where it looked as if, it had a Red Dog reversal off of this moving average, and the next day that happened to me. Ugh. Anyway, with that being said, here is that reversal again from a lower level, and I probably should have tried it. I didn't, and now I think it's up a little bit. So with that said, you probably get at least a tactical bounce back up to 73, and if it wants to continue, you have a lot of resistance up here. But overall, we talk about how hard it is to trade these things. That's why we say keep it in the drawer, and if you have it in the drawer from last year, you're still doing okay. If you're trading it and you did, get out of it when it's sliced, this somewhat of an uptrend from here. Yesterday, if you got long it, on this Red Dog reversal, you have some room to make money. Overall, I still think it's okay. It held pretty much the halfway mark. Definitely not what everyone thought to start the year, but that's what the market does. It wants to make as many people feel as, unworthy as possible. With that being said, here's your pivot, and we'll see what happens next. This actually could be a nice long channel. Then at some point, maybe the economy starts showing better numbers, and it goes to where everyone thought it would be, which is about 3.5% or more at some point in 2014.
Well, while that figures itself out then, in closing, would you say that maybe you'll do a little bit more sitting on the sidelines with some of these names today as they figure themselves out?
Well, I'm going to see if I can be patient enough to be long versus yesterday's low and figure out if, we can get back up to 180, 181 in the spiders, and that would be the tactical trade. In my head yesterday, I'm like, okay, I want to be a big buyer around 177, play it for a move back to 180, and then short 181. That was the plan. It did go to 177.12, and did I execute on that plan as much as I would have liked to? Probably not, because again, I had to do some things and just whatever. So from here, it might not be that quick move back up. we have the Fed tomorrow. That should be interesting. Everyone's still thinking that they reduced the pace of purchase by 10 billion. So you might have a little bit of a float up into it. And then once they do that, then volatility could pick up again. I personally think that they'll do the 10 billion. Okay. And then if we wind up building that right shoulder and getting weaker, maybe the next time if we're down 5, 6, 7% at that point, they might actually not say, I want this to happen. They might say, okay, let's just reduce it to 5 billion. And then that could be the turning point in the market, saying, the Fed's still using that gas pedal. So, they're kind of still with it, but not with it as much. And like we said in the beginning of the year, maybe we could see 8 to 10% to the upside. And, from that lower level, it could be a good opportunity. But that's down the road for now. You have your pivot support. You know where resistance is. You see what's acting better than other things. And you can see it's still random, tricky, and thin. So when that occurs, you do less. So when times have more clarity, you don't have to come from behind. You're more in the game, feeling more comfortable.
And with that said, happy trading, everybody. Have a great day.